Where have all the trainee roles gone is my first topic for you. Hope you're well, by the way. Hope you're keeping well. Here's the first topic then. Where are all the trainee mortgage advisor roles? Trainee mortgage advisor. Now I remember back in 1982, I picked up the local paper, because you didn't have internet then, of course, and there were jobs in there from the Halifax Building Society and the Leeds Permanent Building Society looking for trainee managers or trainee mortgage advisors. But in those days, of course, a manager was a mortgage advisor, and it was a trainee position, and they offered full training, classroom courses, mentoring from your local branch manager, and you had a 1 year, 2 year fast track training system, and I thought it was great, and I went for it. I went for the Leeds. In fact, they took me on. They were more full then, really, and they trained me. It was good training, and I was paid a reasonably decent salary, enough to to pop out and about as much as I could, get a car and things like that, and it was great. It was great. They've all gone now. That's the problem. I was on LinkedIn last Friday. Young lady who just passed a CMAP, had the little emblem, looking for work, looking out for trainee mortgage advisor positions. Anybody help me? Let me know. There aren't any. They're all gone. And that's the big worry. And why are they all gone? Well, it's down to the lenders. Banks, building societies, large lenders used to have great big sales forces. Obviously, they used to have branches, didn't they? And the branches, be they physical bricks or in the telephone call centres or video centres at head office, they used to have hundreds, thousands of mortgage people, mortgage advisors, who used to give advice on mortgages. And that was great, because they took new people on and they had the infrastructure to train you. And you like to work there. I mean, when I worked for the Leeds Permanent Building Society as a 19-year-old young man, I loved it. It was a great job. It was permanent. It was stability. All gone now. Why are they gone? Well, the banks and building societies and the big lenders, who used to have great big teams of mortgage advisors, have realised that they can't afford that anymore. It's not something they want to do. You see, when you're in the mortgage industry, there's two risks. It's all about risk, isn't it? You have the lending risk and you have the advice risk. The lending risk is the risk of lending money. So the bank, for example, let's just choose NatWest Bank, good lender. They lend money, so they loan money on mortgage, or loans, of course, and that's known as the lending risk. Obvious, really. The lending risk is risky. You're lending your money. Obviously, there's plenty of government guarantees around now to make sure you're not lending too much, and the government provide guarantees to help you. And banks are pretty darn good at this. They know how to lend. They've got affordability models. They've got credit searches, and they can do it and do it really well. And that's the risk. What they used to, of course, is they used to give advice. Now, mortgages, of course, require advice. It's a regulated industry, so you need a person to give advice on the mortgage, and that's known as the advice risk. The advice risk is just as risky in a way, because if you give the wrong advice, then you can be complained against, you can be sued effectively, and there's compensation money, there's compensation claims, management companies roaming around the UK looking for business all the time. They're looking for as much money as they can get, so any hint of a mis-selling and they're on you like a rash. So the advice risk recently has become more and more dangerous for lenders to get involved in. And they're thinking, hold on, is it worthwhile us lending? Yes, it is worthwhile lending, that's what we do. Is it worthwhile us giving advice on the loans? No, let's not do it anymore. And that's what they've done. And they've come out with this, I've heard the phrase, whether you'll see it promoted by them or not, is bots or brokers now. Bots or brokers. Bots or brokers is the phrase. See, what they're doing now is they're saying, well, we don't want the advice risk, so let's stop doing that. So how are we going to lend our money? Well, hold on, there's lots of brokers out there. Let's go and lend to let's get the brokers to lend for us. So the advice now has been done by mortgage brokers. Now, a mortgage broker, by Her nature is an independent person who takes the advice risk because they're qualified to do so. The broker might be authorised through a network, or they might have direct authorisation, doesn't matter, to give advice. That's the advice risk, you see. And the lenders are quite happy then to talk to the brokers. In fact, banks and building societies have been recruiting hundreds of BDMs recently. If you want a job that's very well paid, highly stressful, but very well paid with a car and all those good things, but you need experience for that one. BDMs is the way to go. And BDMs, of course, sell to the broker. They sell them. So NatWest have been recruiting BDMs, and those BDMs will rock up in front of the broker and say, look, deal with us, we're great. And that's the way the banks have decided to move. They don't want the advice risk anymore. They don't want mis-selling scandals. I mean, PPI killed their reputation for advice, didn't it? Think about it. Do people trust banks to give advice anymore? I don't know if they do. Maybe the younger generation have turned off, I don't know. Mis-selling, terrible reputations. The metaphor I like to use is the army and the Air Force predominantly. And you might have seen the odd skirmish recently by powers around the world with their air forces. And the one that intrigued me was the Iran-Saudi down in the Middle East, Iran proxy in Yemen. I don't know what the situation is, but it doesn't matter. But they have an air force. So they could either send a manned aeroplane to bomb the baddies, or they could send a drone. Now, a drone, of course, is a pilotless aircraft operated by somebody with a joystick. And this drone hovers over, drops its bombs, etc. More and more air forces now are using drones because there's no pilot risk because the pilots won't get killed. The drone will get knocked out, of course, but they can replace those pretty quickly. So drones now are beginning to dominate air forces. They are here in the UK and the US. In the Middle East, more and more drones are being used. Now that's the metaphor that banks are using. They won't tell you that, but that's what they're doing. It's bots or brokers. At the moment, it's brokers. They're using brokers. Brokers are giving advice. Brokers are using the banks, lending, plenty going on there as well, high street lending. But over time now, they're evolving to bots. A bot, of course, is a robot, and a robot will give advice on mortgages to a customer. Just like a pilot will remote control a drone to fly, there'll be people at head office, 1 or 2 people maybe as backstops. They'll be operating 100, 200 bots that are giving advice to clients. When the bot can't cope with the advice, it'll flip to a human and the human can take over. That's happening right now as we speak. And the banks are good at that. They've got fantastic software engineers all around the world who can develop the software. People like to handle this because it's all chat box based and they can get all the advice they need on a basic mortgage, which isn't really complicated. Okay, get into the specialised mortgage world, that is complicated. Bots can't do that. I'm doing a video later on bridging finance, for example, commercial finance. Bots won't get involved in that market area because it's too complex. Humans, brokers will carry on that one. So brokers beware. You're getting plenty of business from these banks at the moment. They're loving you to bits, but moving forward, it may not be that way, and you need to bear that in mind. But the biggest problem, as I'm concerned here, is where are all the trainee mortgage advisor positions? If you're new to the business, where do you go? So if you're brand new mortgage qualified or CMAP qualified person, what do you do? Well, arguably you join a broker, and that's where you want to go. Now there are some very big brokers who are taking on employed people. There's some very good big brokers. I know loads of them, Dynamos and Countrywides and Habitos. There's some great companies that take on employed people. I do a lot of work for them. So you need to be looking at that angle. Will they take on trainees? Yes, they will. But remember, of course, it costs money to train people. It's expensive. Don't think for a moment it's not. It is. It's very expensive to train people. You need trainers and coaches and time and all those things to train people. And some of the broker firms might not be willing to do that. So they'll probably want to take on experienced people if they have the choice. You can certainly come into a broker as a self-employed person as well. So you can look at the self-employed option. There's lots and lots of options there on the market. Loads of self-employed options if you think about it. You become an AR, an authorised representative of a broker firm or a network or wherever. So they take obviously the advice risk and charge you for it, and you're self-employed and you do what you like. But some people don't want to be self-employed, and I get that. And of course, to get a trainee self-employed position just is an oxymoron, isn't it? It just doesn't work that way, So it's a bit of a quandary, really. So joining a network that gives you good mentor support, good Good coaching, good training is where you want to go to. Even if you're self-employed, it doesn't really matter. You're still connected to the network, connected to the broker, for all intents and purposes. So choose one that looks after you, that protects you, that guides you, that coaches you. If you need mentoring, learning about how to do the job, we're providing that. In fact, I was talking to the LIBF about that recently, about how we can help with people learning the ropes, learning the skills, learning the intricacies of becoming a mortgage advisor. They're the key ones as well, to fast track you through CAS. There are options around, but you have to sort of be a little bit more innovative. If you're looking and searching for a trainee mortgage advisor role, there ain't that many around at the moment, until people suddenly realise that to grow, employed sales force, employed advisor force is the key. To grow people, take on new people is a great thing to do, but you have to put money into it, you have to invest in it. Very few brokers are willing to do that right now. It may change, I hope it does. I'll keep you informed of that one. So that's the state of the mortgage market for you. Keep you up to date, because that's what I do. Hope that's been useful for you. Bye.